They're sort of hand in hand, the top two, aren't they, in firms closing, because firms haven't got the balance right. They don't know how to manage the risk. We've spoken about this race to the bottom where they're giving too generous conditions, too much drawdown, too much leverage, and it ends up at the point where the books don't balance. It doesn't work for them. They can't pay people, or firms that require this constant stream of evaluations, an ever growing thing in order to keep paying people out. And it's just...
Hello traders, and welcome back to another We Are Funny Trading Plus episode. This week was a different kind of question that we asked our traders. We asked our traders, what are your biggest concerns about the prop trading industry currently? We gave them 6 options, and they are not getting paid out, regulation change, market volatility, passing evaluations, AI in trading, and firms closing. So Simon, out of those 6 options that we gave traders, what do you believe are the biggest ones that traders have got concerns in, given the current landscape?
Not getting paid.
Yeah, that was joint first.
Oh, was it? Okay.
Yeah. What, are we going to go for a second guess on what's joint first?
Firms closing?
Yeah, firms closing.
Oh, really?
Yeah. Very good. That's the best you've ever been.
We'll end the episode here then.
So out of the 6 options, not getting paid out was 32% of traders' opinions, and firms closing was also 32%. That was followed by 15% of traders saying regulation change. Passing evaluations was 9%, followed by market volatility and AI in trading, both being 6% of the biggest concerns currently. So let's just touch on one of the biggest ones, which is not getting paid out. Why are traders so concerned about not getting paid out with the current industry?
They're sort of hand in hand, the top two, aren't they, in the firms closing, because firms haven't got the balance right. They don't know how to manage the risk. We've spoken about this race to the bottom where they're giving too generous conditions, too much drawdown, too much leverage, and it ends up at the point where the books don't balance. It doesn't work for them. They can't pay people, or firms that require this constant stream of evaluations, an ever growing thing in order to keep paying people out. And it's just not sustainable. So it's people not doing the business properly. That is the reason people aren't getting paid out. But you can do some due diligence on that. You can search online, search Discord, search Trustpilot and things like that, and start doing some basic due diligence for...
Yeah, you speak a lot to traders who have come to you from other firms and wanting to touch base with you. What sort of emotions and what sort of things are they talking to you about?
Well, look, I get emails that'll be like, well, I was owed 14k by X firm, I didn't get paid out, I want to make sure you're not the same. And it is more common at the moment. I mean, I'm not going to name names, obviously, it's not what we do, but there's some big firms that have gone under and just theoretically owe millions out, and it's not fair, is it?
How can that impact a trader's psychology moving forward?
Well, I think you can just not trust the entire industry. And it tars everyone with the same brush, but at the same time, as a more positive sort of look at it, it can make traders a bit more critical as to which firms they select, and sort of thinking, again, is this set up a little bit too good to be true? If these firms are so generous and so cheap, it's like, well, where's the catch? So you're getting traders who are a lot more savvy, a lot more switched on. Okay,
so we've got not getting paid out and firms closing, exactly the same, 32% for both options. That's followed by regulation change, with 15% of traders saying that's one of their biggest concerns. Why is regulation change a concern for traders?
Well, it depends what any regulation would do. Would it take props out? Would it close the space, or would it just regulate the space? And I think because of the money involved with it and the sort of desire to do it, they're not just going to want to push it offshore into really dodgy jurisdictions. So I think regulation will possibly come in. I'm not sure when, probably not for a while. And we've got the elections coming up and stuff like that. Not much legislation tends to get passed when that happens. And then if it comes under that sort of regulatory umbrella, I mean, we'd welcome that. And I think that would be, traders should see it as a positive thing. It's more likely that it would just make prop firms that don't clean up their act, if you like.
So you're saying regulation change could be positive for traders?
100%. I mean, the sort of indication that sort of brokers are coming into the space and offering their own prop firms is sort of indicative that they think there might be sort of, I guess, a regulatory shift that brings it more legitimate, if you like.
Awesome, yeah. So in 4th place, one of the biggest concerns is passing evaluations. That was a total of 9%, so nothing major. Why are traders concerned about passing evaluations?
I mean, that's been the same since funded trading existed. People are concerned about passing evaluations. I mean, maybe they're thinking that the rules are getting tightened up now by certain firms, and the space is tightening up rules, really, so it's making it harder to pass evaluations, which is true in some respects, and in some respects it needs to be true as well. It needs to be the balance struck. So maybe that's what they're thinking as a momentum shift towards making it a bit harder to pass evaluations.
So do you think traders who are worried about passing evaluations, that's due to the current industry and how it's maturing? They're worried that over time evaluations are going to get harder as the industry matures?
I think so. I mean, there are quite a lot of firms who are having to make rule changes, whether it's completely prohibiting news or sort of like 10 seconds after, 20 seconds after, no tick scalping, and quite a few other rules that are coming in. And to an extent, there needs to be a rebalancing. It needs to be a balance between sort of, how hard it is to pass the evaluation and then the guarantee of sort of getting paid out as well. I mean, I will note that we've not changed how hard it is to pass our evaluations exactly the same, because we always knew that we'd have a sensible balance and that would stand the test of time. So that's probably behind that sort of answer, if you like. People are worried that it's getting harder to pass evaluations, but then it's a case of just selecting the firms that have always had sensible rules and continue to do so.
Yeah, so would you say that's how Funded Trading Plus is staying competitive in this ever-changing environment?
Yeah, there's always that case between sort of it's innovation and creativity and changing, and then the case of it's not broken, don't fix it. I'm very much a not broken, don't fix it person. Now, we've stood the test of time for years now on hundreds of thousands of accounts, all different market conditions, rapid growth, some decline, some stability, and all these ups and downs. We've managed to sort of, sail in a very smooth way.
I like that. No, I like that. And then in 5th and 6th place, with 6% each of the percentage split, was market volatility and AI in trading. Let's touch upon market volatility first, because you've spoken about the US elections coming up. Let's just touch upon how can market volatility affect traders. In this case, it's obviously a concern for 6% of them.
Yeah, I mean, volatility tends to go up and down. I mean, what I would say is volatility for the last few years has been pretty good. Like, I remember trading our trade room, we'd have Dow Jones sessions, and the Dow Jones would move 35 points in August and stuff like that, and it was just wild. And like CPI news had no impact whatsoever, for example, whereas at the moment, volatility is pretty strong. The markets are so high, like take the indices, for example, there are such high numbers, record highs, that even like a small percentage move is a lot of moving points. So I don't think volatility is going to go anywhere, and potentially the elections and stuff that we might touch on that in another piece. Then I think volatility is here to stay for the time being. It's not like it used to be, when it used to lack volatility in the markets, where all the FTSE would move 8 points in an afternoon and crazy stuff like that. And the second point about AI and things like that's not something that I think should concern a real trade. I mean, algorithmic trading's been in the markets for so long. As long as the markets move, that's all I worry about. I just don't even think about it. I don't even worry about AI and things like that. I don't think it's going to kill anyone's edge or make the markets more efficient. They're still going to move. There's still going to be volatility, and there's still going to be opportunities every day.
So have you seen in Funded Trading Plus's lifetime a change in trend on what pairs are getting traded over time, and any new currencies coming in, and any popularity in certain pairs to others?
I think the big thing for me is surprising is how little FX is traded. Maybe cable and maybe euro dollar's quite big, and some people do some exotic pairs, but gold is massive. Gold has consistently been massive, and I never touched gold. It never interested me. Indices are really big, particularly because it's such a US focus sort of industry that people love the Dow and the S&P and the NASDAQ. But Bitcoin's the main one. When Bitcoin's on fire, then huge amounts of volume into Bitcoin, Ethereum, and a couple of others as well, as it's obviously just been flying at the moment. But so that's the only general one that people tend to dip in and out of, is the cryptos. The rest are pretty consistent.
Yeah, that's really awesome. And then we've gone over the 6 points individually, but what is some brief or general advice you can give for traders with any concerns at all regarding the prop trading space?
I think it's just a case of doing due diligence on the props. What's the props reputation? How long have they been around? How realistic are their evaluations? Are they priced sensibly? Are they ridiculous discounts or not? Get into most props have Discords. Get into Discord, ask questions. Are you getting shut down? Can you ask how quick and responsive is the customer service to questions? Just all these things about trying to assess a business, because it's difficult because you don't have that regulatory transparency. There's no minimum capital requirements and things like that. So get on forums and things like that. Twitter can be generally quite good. If you hashtag the firm, you might see if there's loads of complaints. And then if you sort of, that can reassure you a bit to actually do business with the prop. And maybe even, if you do get a funded account, maybe withdraw a small amount just to see how quick and easy the withdrawal process is. And that might just give you a little bit of confidence to carry on with that firm.
Yeah, absolutely. I think we've covered those 6 points, and hopefully, Simon, you've calmed down some of the concerns. It's always a bit of a strange one doing an episode fully about concerns, but I think it's really important to address them.
I have the same concerns.
Yeah, no. No, but I think it's really important that you have addressed them, and there is positives out of some of those concerns, like you've mentioned in this episode. So, really good. If you guys have any other concerns or points that you'd like Simon to talk about in the future episodes, please let us know in the comments down below. But until then, thank you very much, and we'll see you on the next episode.